Good afternoon, everybody. Welcome to the market close. It's back-to-back green, back-to-back green, and holy banana bread. This last hour, we had quite the green candle on the TSX. It's looking like a pretty good day. It's looking like a pretty good day on the market. We of course, not Pulse, but we of course had the Bank of Canada. They announced nothing. There's nothing happening. Rate is staying the same, 2.25%. That's what we were expecting. Now that it's happened, people can stop worrying about it and start buying stocks. And I like that. I like that a lot. So, yeah, pretty good day on the market. Let's jump on in. That is not the market. That is it did this to me yesterday. Like, I actually had pulled it up and all of that fun stuff. It was all set. But then I adjusted the video and that's what dropped it. But let's bring it back. I'll bring it back here. It doesn't take much. Bang, boom. Here we are. And you can see it. Look at this. This big green candle. We went from the red side of the blue line up into the green side. So pretty good. We have a little tiny sliver of red in this last half hour, but that's not too bad. Not too bad at all. So currently the the TSX is up a full 0.78%. I like it. Well, it's not just this side of the border. Let's head down to the US. United States also had a pretty big candle. They are up 0.81% above the blue line. So we're back in green territory for the month. Gotta love it. Same idea with the NASDAQ. They've already been above the blue line, but they also had a pretty good end of day, up 0.58%. Now the Dow Jones, same idea, but they're up 1.22%. And finally, those little caps, the Russell. Now that looks big, but I'll tell you, I think they're stretched out a little there. We're going to crunch them down a little bit. They also had a pretty good candle as well. They're up 1.67%, and they're well above that blue line as well. So whatever's happening today, the tax loss harvesters are not pushing us down. We're doing pretty good. We're doing pretty good for sure. Heading into heat maps. Oh, I saw a little bit of white there. That goes really well with the weather because it is quite snowy here today. It's been snowing all day. It is slowly adding up. So looking at our heat map, and right now the banks all looking pretty solid. We got TD up a full 2%. Royal Bank's up 1.11. BMO 2.20. CIBC up 1.20 as well. Scotiabank up 0.56. Not looking bad. I will say, right now, this month is when we get all of their annual reports as well. And I can tell you they had a good year. They all had a good year. Record profits. It's one of the reasons I get excited about things like 60, because those banks are pretty 60 for sure. Looking at the rest, there's a lot of green in there. I mean, the railroads are up. CP's up a full 2%. Even CNR, they're up 0.22. Not as impressive as CP today. The telecommunications are down. So we do have we have some down in there as well. All right, Enbridge. Oh yeah, Enbridge is down today, 1.23. All right, switching south of the border, we've got kind of a mixed match here. A lot of things are up. Tesla up 2.17, but look at this. Microsoft down quite a bit today, 2.87. Netflix down 3.92 as the drama continues between Netflix, WB, and Paramount. Oh boy. So hope that gets settled sooner than later. Nvidia down a wee bit, down 0.79, but Broadcom is looking good. So Broadcom's looking good. Amazon's looking good. Let's take a gander at crypto. So over in the crypto sphere, Bitcoin is up a wee bit, up 0.43. Ethereum up a full 1.72. XRP though is down a wee bit. But guys, it is tradition around here. I like to pick on an altcoin, and I like to look at one that I've never heard of that is the opposite color of whatever Bitcoin's doing. So Bitcoin is in the green right now. So let's find ourselves a little red friend. Here's one. What's this? Let's try clicking on it again. Hello? Are you home? Guess not. Let's click on the one above it. Oh, we seem to have a technical difficulty here. I'll refresh. Let me refresh this, and I will go back in because it's supposed to click. It is supposed to click. All right, we'll grab this one. What is this? Oh, seriously? Or this one? All right. Yeah, these are not opening. That's odd. All right. You know what? We could still make fun of them. I'll just bring them up. Here we go. Ooh. I really want this one to open. Pirate Chain. Pirate Chain will be the one. Arg. What can I say? I don't know what this one does. It is down 6.61%. I have no idea what it's worth because, like I said, I don't know why, but oh, it's worth, actually, there's the price. This one's actually worth 26 cents, so it does have a little bit of value to it. No idea what it does. It's risky. You might be walking the plank with this one, and it just disappeared. What the heck? Anyway, these can be really, 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 really risky, guys. And where did it go? I don't actually know where it went. Oh, yeah, look at this. Look at this. A Mog coin. Will that actually let me click? No, I thought maybe, or dog Bitcoin. I don't know. What's this dog? The dog ate my Bitcoin. Anyway, guys, the whole, what a day. Avoid those altcoins, guys. I call them crap coins because they're like going to the, it's like going to the casino, throwing monies at the crap table. You're probably going to lose. It's not going to work in your favor. If you do want to make money, you can certainly make money on the larger coins. So your Bitcoin, your Ethereum, your XRP, your Solana, and gosh darn it, even the Dogecoin. All right, let's just jump into chat. And guys, after the bell, I got something I want to show you. Guys. So that'll be fun. All right, let's jump in. At the top, we have Wahipple, first in the house with a hey all. Claude says hello. Today, the Green Hulk won versus the Red Hulk for sure. Well, you know, green's the original. Well, actually not. I'm going to give you guys a little bit of comic book history, but the original Hulk was actually gray. Like way back, like when the Hulk was created. The Hulk was originally gray. So green came a little bit later. But we might as well say the Green Hulk is pretty much the original. But technically, the Hulk started as a gray Hulk. Why do I even know that? I don't know. Paul says good afternoon. 0.25 points. Afternoon all says Rory. All right. And guys, as you know, we have the Financial Express going. So how that works is we departed the end of November. It's traveling all the way through December. And that means we have the opportunity to have a market close every single market close in December. So it's the way it works. If we get, by the time we're finished today, if we get 4 supers or 4 gifted subs or a combination that adds up to 4, we add a show tomorrow. And then tomorrow, if we do the same thing, we add a Friday. So we just keep on tacking on shows. Today is our normal Wednesday show. So nobody earned today. Well, you all earned it by being, being here for sure. But anyway, that's the Nightbot. Oh, and guys, you can use as many emotes as you want because I have removed the Nightbot's ability to give you warnings and to time people out and all of that fun stuff. That's gone. It's gone. All right. Cowboy is in the house with a greetings all. Rory, okay, shoot, hits the like button. That's right. I think, no, I didn't see Mary. I was going to say, did Mary come in? I didn't see her. She's probably in, though. She's always here. Larry says, my two stocks on a 70-30 Bayer Ancillor split are doing fantastic. 40% and 30%. I'm just going to coast and do nothing else for a year. Nice. If it works out, nothing wrong with that. Let's see, Rory, but you better hit the like button, Larry, or you feel the wrath of Mary. Yeah, you got to hit that button, guys. I actually have no clue. Oh, you know what? I'll refresh. I'm going to refresh my test screen. Let's see how many likes are in the bank. We got 23. We got 23 out of, and right now there's about 56 of you. So that's less than half. Less than half of you have hit the like button. Mary's going to be disappointed. Oh, boy. All right, let's go to, I needed to get my mouse back, Larry. So I don't see any reason to do anything else on stocks I consider 100% guarantee. Yeah, exactly. I mean, when you look at long-term investing, right, if you're investing in really good stocks, that's kind of a similar thing. Or in this case, Larry's, of course, not investing for the long term. This is more of a make money play, for sure. Cowboy, BK and FTN are doing a split, 10 for every 100 shares. So that's a reverse split then, right? They're going what? They're basically you'll get 10 shares if you have 100. Interesting move. Definitely, I haven't actually looked into that. I wasn't aware that was going on, but that is an interesting move. I wonder why they're doing that. If is it, Kiev and Kaz, good afternoon, gang. Got to trade that BTC whipsaw this afternoon with Hut. You know what? What do I got? I'm paying attention. I was 3 minutes late yesterday. But I'll tell you, we actually forgot. I stopped at the Russell. We didn't look at the rest. So guys, gold was in the green today, up 0.60. Silver up 1.80. Copper back in the green, up 0.78. And oil, WTI, West Texas Intermediate, up 1.21. Okay, let's take a look here. Let's see here. Oh, so yeah, look at this. We got a pretty big candle. So yeah, there was definitely some opportunity on here. I mean, it ranged from 92,000 to 94,000. So not too shabby, not too shabby. And there's Ethereum as well. Ethereum also not quite as big of a whip play, I think, on Ethereum. All right. Getting back over here, and I got a minute and a half. Not missing the bell this time. FOMC days, I just sit back. I hear ya. Larry says, Mary will never take my freedoms. Uh-oh. FOMC, that's the U.S. Fed. That's the Fed. Rory says, ha, 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 ha. And Rory, Federal Open Markets Committee, the U.S. Fed. There you go. Bullish on Jelly, my jam coin. I like this one. FOMC, fear of missing Candace. I think that one's better. Let's go with that one. All right, we got Mary in the house with a hello all. That means, guys, I mentioned that less than half of you would hit the like button. Mary's here now. I'd hit it if I were you. I'll have some coffee. Well, I can't. I can't have coffee. I was about to have coffee, but I got only 13 seconds to the bell. I'm not missing it. My hand is on the bell, and it's not leaving until after we have that sweet ding dong. And here we go. The market's closed. Ha ha! I got it on time. I love it. I love it. It makes up for yesterday. So I'm 2 out of 3. 2 out of 3. And if you guys add 2 more shows, or if you add a show, we'll see if I can keep that streak alive. All right, here is Rory. All right, we're going to leave that alone because we're not going to get political. Let's see, SB, not as sexy as you. Ooh, you know how to say all the right things, don't you? Let's see. Wahipple, hey, Mary hit like on the way in. Good afternoon, everyone, says Morley. And we got Mark in here. Hey, Candace, I want to invest in a neighborhood kid who's willing to shovel this heavy, wet snow. You know, do kids even do that anymore? I know when I was a kid, me, my brother, my sister, the 3 of us, we'd grab the shovels and we'd go door to door in the neighborhood when it snowed. And, back then, of course, we charged usually about $2. $2 and we'll do your driveway. Nowadays, I imagine it's probably closer to 20, but are kids still doing it? Or, can they pull themselves away from the screens to go out there and make a few bucks? But yeah, it's snowing at this side of the country, guys. Joe was in the house with, snow. A lot of snow. Rory says it's blustery out here too. And we got Jonathan. They say if you hit the like button 3 times, Mary will appear. This is funny. So Jonathan says this, and the very next comment is Mary. What? What are the odds of that happening? What are the odds? She will, and she is watching, Larry. There we go. Oh, that was funny. All right. My only U.S. holding, as I was playing around a little about 2 years ago, YieldMax AMDY. All right, so that's your AMD one. How has that one done? I have not been paying attention to the YieldMax. I'm not a big fan of YieldMax, but hopefully, AMD has had a pretty good year, so maybe you're okay. Maybe you're okay. I also got the 1-for-5 split this week. Rory says, HYLD is the only U.S. covered call I own. Not too bad today. Yeah, absolutely. And as you guys know, subscriber-sponsored video that Paul has asked to do a double deep dive on HYLD and HDIV. That's coming up, guys. I actually scripted that today, so it's coming up soon, probably Friday, unless that other video is ready before even it'd have to be ready quite literally by tomorrow morning. If it's not ready by tomorrow morning, 100% we're going with the Paul video, and then that one would be a Tuesday video. All right, Cowboy, you get 10 more for every 100. Oh, okay, so it's not a reverse split. All right, understood. Understood, because I was thinking to myself, that's quite the reverse split. All right, good. I'm glad I misinterpreted that. Let's see. I still need to add some HYLD. That's an amazing ETF. It is pretty good. Oh, and guys, that last video, I want to point this out. Some of you may not have seen, but there's a pinned comment on it because there was a tiny error there. The error was when I was entering into, I have a database. I have an Excel sheet that I use for calculating total returns. So when I was putting in the current price of HYLD, instead of 14, I put in 19. Didn't catch it. The channel members watched it. None of them caught it. Because if one of the channel members caught it, I would have just, it's still, it would have been a pain, but I would have tried to fix it. It was pretty much, video had already been out. 3,000 or so people had already watched it when people started catching it. But anyway, yeah, so it changes up the rankings a little bit. So Bank actually did come in first. And the funny thing is, and this is what I find hilarious, when I was filming the video, and I even said it in the video, that I was surprised that Bank didn't come in first. And they actually did. So bank did come in first. HYLD actually came in third. Still great. They still did a fantastic job. One of the reasons that I'm leaving the video up is, I still think they're all very, very good. I'm probably going to do some more like this just because people really liked this one. They're really liking that. So maybe what I'll do is I'll take a look at Blossom's, some of their, well, let's maybe do their stocks. I haven't done a stock video in a while. Maybe look at the Blossom stocks and do that. So that's probably going to happen sooner than later because I like that idea. Right. Huge Melio says, hi, beautiful copper, silver, or gold. Any ETF recommendations? I love copper, I love silver, and I love gold. It really depends on what your goal, what your object, what you want. So for me, if you're looking for a little bit of growth, excuse me, with a little bit of income, GLCC is actually a really good one. Now, yes, that one is a gold, but one of the things you have to face is a lot of these mines, they don't just have one mineral. So if you've got a gold mine, you probably got a little bit of silver in there. You probably got a little bit of copper. So you are still getting exposure per se. But here's one thing I will say. We're probably going to see a lot more mineral ETFs coming up soon because minerals are becoming really big in Canada. So I'm expecting some more coming up soon. And I'm going to do some research, and I will get a mineral video out. It probably, I don't know if I'll get it out this year, but it might be a January one. Gursky says hello. I like before I comment on my way in. Nice, nice. And of course, there's the Nightbot again. Let's see. I love this one, Jonathan. Every time Candace remembers to ring the bell, an angel gets its wings. Yes, that's my own version of the Christmas story. Rory, kids are playing Call of Duty and watching OF. They don't shovel. Yeah, it's yeah. For that I want a coffee. I want more coffee. All right. Now, we're probably going to be behind for a while, so I want to show you guys one thing first. So there's a good reason, guys. So if you're ever at a website for one of the ETF companies, when you leave, a lot of times it'll pop up this thing and ask you for your email address. I recommend putting your email address in there because sometimes they send you some goodies. Sometimes they send you some stuff that's pretty cool. Now, I want to show you Harvest. I just got this email today. Let me pull it up. They sent me a booklet in the thing. I was reading through the email and it said, oh, here's a Harvest booklet. I'm like, oh, what is this? It's actually kind of cool. So here, let me share my screen, and I've got the booklet right over here. So this is their Harvest Investment Products 2025. Now, that's cool. Look at that. Look at that. That's a great animation. It's like they spared no expense. But here's the thing. They're going to go through, and they're going to go through all of their different offerings. And I think that's really, really cool. They give you a little bit of the benefits of a covered call, a little bit of information. And you can come in and you can look at some of their solutions. Now, once you get past the first couple of pages, you've got a page that has basically the basics information for each of their ETFs. So if you're looking, even if you're looking for an ETF, a new one, you can come through here and say, okay, here's the Harvest Healthcare Leaders. Look at that. It's got a 9.10 right there. And, it's not bad. It's not bad. And, you can come and you can look. So look, there's HTA, HTAE. Look, every time I see HTAE, I think of the word hate. I always say hate first in my mind. It's terrible. You got HUTL, and you can see HGR there, and basically, see, they're all here. I'm just sort of going through them pretty quickly here. There's HRIF, HGG, HBLK, HBTE. Here it is. One of my favorites. So this one here I have in the 0 to 100K challenge. So it's in here too. But I just wanted to show you, these are some of the goodies that a lot of these companies, I mean, they're doing it all because obviously they want you to invest in their ETFs, but some of the goodies are pretty good graphics. I was just looking at this one today, and I was like, I really like this one. Oh, is that the end? Oh, that is the end. Look at that. HBTE is the end all. It's the end all, guys. But anyway, just something, it's something kind of neat. And just very quickly, I want to just drop back here and take a look at yeah, look, they did get back, even that last candle got back into the green. So that's not too bad. That's not too bad. All right. Jumping back into the chat, Claude says, I prefer every time Candace misses the bell, a demon gets its horns. Oh boy, it's like you guys have just sort of made me like the epicenter of the war between heaven and hell. I mean, what is going on? Dave says, what do you think of Canny and Sixy? All right, so Sixy, I love Sixy. I actually did I normally don't do a video before an ETF is even released, but with Sixy I did because I really like the idea. I love, and it's not even about the semi-monthly payouts, but yeah, it's nice to get paid twice a month. But the Canadian banks are on fire. They've been on fire this year. They're probably going to be on fire next year. That to me is it's just a no-brainer. Now, Canny does have, of course, good access to those Canadian banks as well. You also got a similar payout schedule. So yeah, Canny's not bad either. You're getting a lot more diversification with Canny as well because you got exposure to more than just the financial sector. Scott says kids can make a TikTok of them shoveling driveways. That's the motivation. Turn it into a TikTok trend, and your driveway will get shoveled. That's a good way. That's outside the box thinking for sure. Mario says, good afternoon, everyone. All right. C-Star says, hi, Candace. I was curious why you sold your holdings on BN. You mentioned it the other day. All right. So BN is Brookfield Corporation. It's kind of interesting. So I have my mindset is a little bit on the trader side. Like sometimes I will look at something, and if I can see clearly that I think it's going to retrace for a while, I don't mind taking myself out, especially when it's at a high. And with Brookfield, and it wasn't actually BN. It was Brookfield Asset Management. So it was Brookfield Asset Management. And let me demonstrate this for you. And let's just come over here. Let's go to Brookfield. Not the D, that's D-Box. We want to go to Brookfield. All right, BAM. All right, here we go. Because it's a little bit easier if you sort of see what's going on here. So, I mean, I love Brookfield. They were doing really, really good. Now, I got out earlier in the year. Basically, I got out up here in this big peak up in here. And reality is, we haven't even gotten back. I mean, we almost got back once, but I avoided this whole, well, I avoided what Donald Trump did. That was kind of the whole idea behind that. But it wasn't even that. It was just more or less, I felt like we were going to move down for a bit, and I thought I would get out for a while. I still love them. I will certainly get back in at some point to Brookfield Asset Management because they are a good stock. They are one of my A-tier stocks, or sorry, S-tier. So I would consider them to be an S-tier when you look at the tiered group. So I do love them. I will probably get back in them. Maybe sooner than later. I'm looking at where they're at right now, and I kind of like where they're at. I think this is a good buy area. So I am definitely still a Brookfield fan. And and I know there's some politics around them, and I don't care about the politics. I throw the politics out. Nothing to do with the politics. I do like the company. All right. A Cowboy says, can you do bell ring averaging ring at 18 minutes early to reset the zero misses? Okay. Well, yeah, there we go. Yeah, guys. I'll ring the bell tomorrow, just before the show. Well, if we have a show tomorrow, I'll ring it before. No, no, I'll get it. I'll get it on time. I'll get it on time. Mario says, I want to pick up more HDiv, but the price keeps going up higher. Yeah, it does, doesn't it? Well, here, HDiv right here. So here is good old HDiv. Let's look at them for the last year. And yeah, we're on a pretty big trend to the upside. Now, one of the things you have to realize, too, this is an interesting year. This year, the TSX outperformed the S&P 500 by quite a bit, So, yeah, it's and guys, actually, the video I'm doing with HDiv and HYLD, I actually do show you guys what's going on between Canada and the U.S. in that one. So I kind of like that. I kind of like that. Gursky, I bought Waste Connections today. All right, so WCN, let's pull them up. All right, so Waste Connections, I like Waste Connections. I think this is another one of these, when you're looking stock-wise, I think this is a good long-term hold. And, you know, oh, and they're down a little bit right now too, so that's not bad. They've been down for a while, but let's just zoom out a little bit further here. Typically, they do tend to move up, and you'll see they've got a little bit of a correction going on. That's fine. But here's the thing about this business. They're recession-proof. They're very recession-proof. And when we eventually do go into a bear market, this will be one of those businesses that are not going to see a huge backwards movement. They're not going to move a lot to the downside. So I think they're going to be fine. I think they'll be fine. All right. Alfonso says, when do you think micro or strategy will recover? MSTR. Oh boy. No, this is a fun one. And, you know, there's also, of course, MSTE, all of that. Oh, look at that. The CDR is really down too. Yep. Well, of course they are. So let me pull up micro strategy for you. And let's pull up the 3-year. So here's the thing. Bitcoin exploded. We had, of course, MicroStrategy exploded. Then they became strategy. So they've gotten rid of the micro part. Although they might want to bring the micro part back because they're back down again. But yeah, so when Bitcoin, of course, retracts, that causes some problems. But it's not just that. That's not their only downward pressure. The other downward pressure is, their strategy to borrow as much money as possible to buy more Bitcoin. And that's what Michael Saylor does. And some of the strategies he uses, like convertible bonds and things like that, well, in a nutshell, it ends up diluting the shares. So their numbers of outstanding go up. That puts more downward pressure. So you've got Bitcoin when Bitcoin is doing bad. You've got this other downward pressure that pushes them down. Now, this is a long game. For Michael Saylor, it's a long game. If he's right, and he has been right up to now, everything he has done has worked out exactly like he's planned. I give him credit for that. If this works out, MicroStrategy, well, yes, our strategy, they will recover. They'll recover big time. And I would say, if you're currently holding them, it really is going to depend on what Bitcoin does. If we have another big run of Bitcoin and we end up with like a blow off top down the road, you'll definitely have a pretty big surge in strategy. But I think where you're really going to see some of the dividends for what Michael Saylor's been doing is probably after the next crypto winter and into the next big cycle for crypto. So I think if you're a fan and you believe in what he's doing, you're probably gonna need to you'll probably need some diamond hands. But if you are not invested in it and you still believe what he's doing, these are not bad places to be getting in. They're not bad places. Now, mind you, when you start to look at like MSTE, you still have that. You got like leverage and everything else in there too, so that can make it even worse. But It's up to you. You have to have conviction, and I will tell you, this is a rough one to ride. And I think a lot of investors just can't deal with the pressure of the volatility that you're going to see on this ride. So, if you can, great. But if you can't, don't even get involved in this if you can't. I always look at it this way. I don't have direct exposure to strategy, but I do have exposure through ETFs that are using them, not as a major part, but as a small part. So for example, I've got HBTE, they're holding some strategy. I also have HHIS, they're holding some strategy, but they've got a lot of other stocks, other investments in there to balance it out, for sure. Oh gosh, that's so good. And this next question ties right into what we're talking about. So do you think MSTE or MSTY, MSTE would be buy the dip opportunity or a catch the knife reality? I wouldn't call it a catch the knife. I think they'll go lower, but one of the things I know is that Harvest has no intention. They have no intention of getting rid of MSTE. It's a reflection on the asset that they're holding. It will, if strategy continues to go down, yeah, it's going to go down. Will it go lower if we go into a crypto winter? Yeah, it will. But I do think on the other side of that, it will come back. And I'll tell you right now, if something like MSTE, when we go into crypto winter, that wouldn't be a bad place to be adding some of this disorder, because we've seen what happens when crypto comes back out of a crypto winter. I mean, all of this, like look at the last time in November of 2001, it was up around 60,000 and it went down to, I think at one point it got down to about 18,000 into a crypto winter. And if you had been stacking anything Bitcoin at that point, whether it was MicroStrategy, whether it was, here, you know what? Let's actually pull out the 10. Well, it's really hard to see it on here, but you can. So here it is. Right here, this is MicroStrategy. This was crypto winter. And yeah, look at that. It fell. It fell from about 70, what's this? $80. And technically, even before that, it was up around 103, but it never made it back, even though Bitcoin was higher here. Well, because MicroStrategy buying more Bitcoin, a little bit of that dilution had already started happening. But yeah, it fell big time down to $22. But then Bitcoin had its big moment, and look at this, it went up to like 400. So, this is kind of what does happen. And when we move in, and this is gonna happen again. It will be, it's obviously gonna be at a different spot. But you will, there is that possibility that they could go down a little bit lower. I could even see them going as low as $100 in crypto winter. And that would be a beautiful place to be buying a MicroStrategy or something like MSTE if you're looking to ride that back up with the leverage. So we will get this rebound again on the other side of this, but you got to be patient. I call it white knuckling. Diamond hands. Yeah, it's now like I said, when we get into crypto winter, I will, I don't know if I'll do it through strategy, but I will definitely stack up some exposure to Bitcoin, more exposure, because I know what happens on the other side of it. I've seen it more than once. All right, Scott says picked up some CNQ today. It was down $1 before, mostly recovering. Nice. Thank you. I will be, I think you mean waiting. Let me see here. Q's next to W on the keyboard. All right. Waiting for Enbridge to drop to $59. Doorpat is in the house. Hello, all. Okay, and this is time for coffee if I'm gonna. So good. Let's see. Doorpat says, sold my Delta Airlines today. Finally decided to get out of airlines. My Air Canada is sadly still falling. Hopefully it hits 23 again where I bought it. Waiting game. Yeah, I think Air Canada will get to 23 again. Air Canada, one of the things about Air Canada is, number one, we got two airlines. I mean, really. I mean, you could talk about some of the little airlines, but we got Air Canada, we got WestJet. Those are really, they're really the only game in town. And Air Canada is pretty much, it's pretty much, and I'd call them a national airline. It's the one that the MPs use. They're going to be fine. They will recover, and they always do. It's one of the reasons I love swing trading with Air Canada, because, you know, especially if you're looking at longer term swing trades, Air Canada will be fine. You will get your opportunity at 23. I have no doubt of that. When? Gosh, I don't know. I wouldn't be surprised. I wouldn't be surprised if it does happen in 2026, though. All right. Newell says, what did I miss? Good question. Good question. Oh, you know what you missed? You missed us looking at a little magazine earlier. We were all looking at a Harvest magazine. Karachachan says, hi, Candace. What do you think about GDXY? 30% yield with gold. I do love my gold. And adding yield to gold is good. However, gold can sometimes grow pretty fast. And actually, let's bring them up. Let's bring up GDXY. Here we go. So here we go. This here. So this is the yield max. And as you guys know, I'm not a fan of yield max, but I am a fan of gold. So I'm going to pull up. And here's the thing. Look at this. This bugs me. This does bug me. I'm going to just say it right now. You know, if you're swing trading this, fantastic. Look at that. But it is up and down. Like, you're really not making a lot of progress here with gold, considering the year that it's had. Now, mind you, you are getting, well, look at this, 43% dividend. So you're in this for the income, 100%. If that's what you're looking for, that's fantastic. Now, I like to have a little bit of growth in there as well, and I'll show you. So, you could go with a nice big dividend, but something like, and I'll show you something like GLCC. Now, this is not a great one when it comes to the price, because look, you're only getting like a 5.7, but I want to show you some of the growth. When you look at it the last year, you can see you're also getting a ton of growth. So with gold, I would be kind of a little bit careful that way. Another one, let's see, AMAX. Whoops, I guess I gotta drop it in this way. And so AMAX, now this one as well, this one has even more of a dividend, so not a lot more, 6.619, and it's kind of a similar situation. When you pull it in, you can see it. So that's the thing. Gold has so much upside right now, especially when people are worried about what the market's going to do. So, I would run the calculations, because, that great big dividend of yield max, it may not be so great when you finally run the calculations and you look at all of that upside that's lost, because gold has had an incredible year. So I'd be a little bit careful with that. And also, I mean, yield max has had a few problems with some of their funds already. Just look at ULTY lately. So I'd be careful with yield max. I'm not a fan of yield max, and I'm putting that out there. Am I biased a little against them? Maybe. I don't think I am, but I might be. All right. Now, I gotta jump quickly over here. We got ourselves a super chat coming in from Scratch. So hello, everyone. I just made it from the storm. Do we have a show tomorrow? Well, we're 1/4 of the way towards a show. So first of all, though, we got a goat. That means Scratch is the goat, our first in the enclosure. I guess our goat enclosure for the greatest of all time. So we are one away. We are one in. We got 3 more to go if we're looking to do a show tomorrow. I would love to be back here tomorrow. I kind of hope you guys make me work every day. I hope you make me work every day. I've got the energy. I'm ready to do it. All right, let's get back to the comments now. But thank you very much, Scratch. All right, now, where were we? Let's see here. All right. I'm down around here, I think. I think. Sometimes when I go to show a super, I completely lose where I'm at, but not, there we go, right here. I think I'm about here. Let's see. Yeah, right here. All right. Cheers all. We got Zyborg. Cheers all from the gray and slushy GTA, Greater Toronto area. For those who do not know what the GTA is, I love Toronto. Toronto's a great city. I don't know if you've ever lived in Toronto, guys, but it is a really fun city to live in. You can get around pretty fast too with the subway. It's a pretty good system. So I do love Toronto. All right, Edmonton Gord comes in. Check FTM from Quadravest has given 10% bonus shares twice over the past 4 months, plus 17% prorated monthly dividend. Nice. I want to do a a split core video. So I am looking now, mind you, the thing that we're talking about. So this interview that's coming out, it is all we are talking about a split core fund on it. But I do want to do a split core list video because I really feel like people don't understand split cores that well. So it is something I want to do, and I want to talk a little bit about it and sort of dispel a lot of stuff. So I might even do that one before the end of the year. But yeah, an FTN, there's a lot of really interesting ones. And I'll tell you guys something. Before the explosion in cover call ETFs that we've had lately, like back at the beginning of the pandemic, split cores were one of the key ways for income investors to get some high stuff, some high yields, because there wasn't a lot. And holy banana bread, I see there's action going on. All right, let's come back to the action. We got Paul. So Paul is in with a $1 super sticker, and hey, that's enough to make Paul another goat. So we got a couple of goats in there, but holy cow, thank you, Paul. That's not everything. A Relaxing Rain has come in and gifted a Mountain Finance membership. Who won? King a Day. Awesome. I love it. King a Day has won a membership to the channel. Great. Oh boy, that's also a goat. Oh boy. And if that's not enough, Kiev and Kaz came in with a $2.79 super sticker, and it's seeing as you want to do another show. Well, that does get goat status as well. And that's it for the goats, guys. If we get any more, I'm gonna have to break into a beaver video. I'll do it. I'm not afraid to use the beaver. Definitely not afraid. Thank you once again, Danny. We have our 4. So guys, we got a show tomorrow, and tomorrow we'll have an opportunity to do a Friday show as well. So this week continues. I love it. All right, now I know where I was because I was on a comment here from let's see here. Where is it? I'm looking for Edmonton. Edmonton. It'll get me back to where I was. I wish it would remember where I was when I go and click on something, but here we go. We were on Edmonton Gord. All right, next up we got Dorpat. Now, what's the difference between QQC and QQC.F? Also, by the way, QQQ and QQM, it's all so confusing. All right, well, let's take a look. QQC, let's pull them up here. All right, so here we go. Okay, we got QQC here, and we got QQCF. All right, that's a good question. I'm going to open it up, and I'm going to do this. I'm going to actually duplicate this, because I don't know right now what it is, but we should be able to look at it and kind of reason it out here. QQQF, obviously, Oh, is it QQF? No, it's, oh, sorry, QQCF. There we go. All right, here we go. So we got both of these up. Obviously, the price is one. So sometimes a company will have a whole bunch of different variations of a stock, and that's probably what this is. But let's see if we can see what this variation is. So here's their normal one. First thing I like to do is just come down and take a look. So this is a regular quarterly distribution. Let's see what this one is. Is this the same? Yeah, it is. It's also a quarterly distribution as well. So that's kind of an interesting thing. So it's usually just a series. I'll give you another great example. If you look at Berkshire Hathaway, so BRK, which is their main stock, and it's like hundreds of thousands of dollars. It is a lot of money. Whereas to make a version that is a little more affordable, they got dot B. So you've got, sometimes you will get different versions like that. So that's kind of what I'm thinking here. And I don't know why they're doing it. It's kind of, it doesn't really tell me a lot here. Let's see here. I have a feeling that these are all going to tell me the exact same thing. Yeah, it's not really telling me. So I don't know the exact difference between the two, but in this case, it might just be that they have a few different ones. Now, it's kind of interesting because sometimes, like, let me show you something. I'll show you. Canoe does this as well. So you got EIT. So you notice here's your normal one, EIT.UN. Well, you've also got this one here. So you've got EIT.PR.A. It's still the same thing, PR.B. So these are all still part of the same thing. And now I believe this one here is quarterly, if I remember correctly. Yeah, see, this one here is quarterly and it has a smaller dividend. But they do have other different funds, and usually they have some purposes. I'm not sure what the purposes is with these ones that you're bringing up, but for the most part, I usually will, I'll usually just grab whichever one is. So between QQQ and QQM, I probably would just grab QQQ, unless I had a reason to go with the M. And, oh, excuse me. Let me just see here. QQQ. So once again, yeah, Invesco. And I'm not even seeing the QQQM. Let's put an M in here. Oh, there we are. So yeah, we got that as well. So yeah, I don't have a definitive answer for you on what the difference is between the two. I would have to like actually dig in on each one. And there's different reasons they might do that. There's different reasons a company might do that. So it's just a matter of just digging in. All right. Edmonton Gord says, and yes, I own lots of shares. Nice. Tom Smith. If you are that interested in MSTR, try MSTU, 200% leverage. I double dog dare you. I'm not that interested. I'm not that interested to go with two. I do not like using that much leverage, guys. I've done a couple videos on like Beta Pro and what was the other one? Long Point or Long something. Boy, they've got a lot of leveraged funds, and I'll tell you, I don't think I will touch them unless I'm doing a specific trade. If I'm doing it for a swing trade, a short-term thing, yes, maybe. But yeah, I tend to avoid the really big leverage. I don't mind like the leverage that we see right now on typical ETFs, 25%, or 33. I think 33% is the higher. I don't mind that, but I don't want to go much higher than that. A Northern Gal, late to the party, listening to Candace at high speed. Hello, all. Awesome. You know what would be fun is I should talk really, really slow so that on high speed it sounds like you're listening it on regular speed, and then you turn it up again, and then I start talking normally, and it's just like Chipmunk Town. That'd be anyway. MSTU or online blackjack? Yeah, it can be. It can certainly be that way for sure. Claude says, I hope El Monte ALL drops further following their recent addition of new shares to fund their projects so I can buy more. I think it's a winner long time, or long term. Let's take a look. Let's take a look here. So yeah, anytime, a lot of times companies will do that. Oh, I'm not even seeing them at all here. Let's try Let's actually try typing it all out. There we are. There we are. Sometimes I don't understand that with TMX. Sometimes I'll type in the ticker and it just won't come up. I got to type out the full name, even though ALL is their ticker. I guess you can say their ticker has it all. Anyway, oh boy, that was bad. So yeah, sometimes a company will, of course, to fund acquisitions or development or expansions, sometimes they will dilute their shares. And when it does happen, obviously, if you got more diluted shares, just the math will pull that price down a little bit lower. So if you're looking to get in, and what they're doing, and this is what I always say, if they're diluting for a purpose, it's not a bad thing to jump in afterwards. And that's, so for example, actually a great example was Alimentation Couche-Tard. So ATD, when they were looking to buy 7-Eleven, if they had won that bid, if they were actually able to buy 7-Eleven, they were going to dilute their shares to do it, to help fund it. But that actually would have been a good thing in the long term. Now, mind you, I got out because I was holding them in case that happened. But I would have got back in after the dilution for sure, because they would have been the biggest convenience store chain in the world if that had gone through. So what can I say? Tom says, sounds more like MS. Yup. I'm not going to say the rest because it's a family channel. Dave Prez says, do you think Biggie, Canny, 6E, the yield is too high for core positions? I would look at what your portfolio, what your goals are with your portfolio. So if you are more of a hybrid investor, so basically a growth income or an income growth, or growth income. If you're a growth income investor, I would say that those are not really, those are more of your income engines. To me, those wouldn't be your core positions. But if you're fully income, so let's say if you were, example, if you were retired, you were basically turning your TFSA into an income machine. They could certainly be core. But, and here's the big but, and I want to put this here. I said they could be core because right now with those three, there's one thing that they don't have, and that's history. So I would say I wouldn't put them core. Even if you're a full income investor, I wouldn't put them core for at least get a year under your belt. Let's see what happens. I mean, there's some really good ones that you could have as a core income. But I would say these ones have that potential to take that role, but not yet. Not yet. You just need a little bit of history to see that they're going to. Like, I think, like 6E, of those three, I think 6E will have the bigger chance of being core. I still like Biggie, I still like Canny, but the Canadian banking system is just so strong. So 6E, I think, is kind of stacked in that way. Dorpat says, are we in a crypto winter yet? Where would you consider it to be a buy time? We're not in a crypto winter yet. I mean, well, here, let's take a look. I mean, if you look right now at Bitcoin, and where is Bitcoin? Hello, Bitcoin. Oh, you're right underneath a whale. I mean, Bitcoin right now is still sitting at like 92,000. We're still fine. When we drop to a crypto winter, like Bitcoin will go down. They're going to go lower than 85. And of course, we were down at 85 not that long ago. I guess, and this is an educated guess, but it's still a guess. I want to make that clear. I'm thinking between 50 and 60,000 is where we'll see Bitcoin settle into a crypto winter. How long will it be in that range? Hard to say. When we look at the last crypto winter, it was down there for months. Almost probably. Well, here, actually, all right, let's do it. I'm gonna change this. We'll change this to gonna change it to the 1-day chart, and let's pull it all down. See, here is here's that zone I don't want Bitcoin to drop below right now. It's a support zone, but I'm gonna. All right, let's squeeze this all in. Here we go. Squeeze it down, squeeze it in. There we go. This is what I want. So this here is the last crypto winter right down in here. And you will see. So here's where it all began in November. So November of 21, it crashed, it came down. There was a little bit of a, kind of a little bit of a thing here around 40,000, 35 to 40. Had a little bit of a bull, a little bit of a bull bounce, but it then did the rest of its descent down to crypto winter. And so for me, anything in this area, so basically from about June of 22, really until January of 23. So roughly 6 months. So 6 to 7 months was the bottom. I mean, there was a lot of movement in that area, but I would consider that to be the core part of crypto winter. And then, of course, after that, you can see it slowly moved up and then it exploded, went sideways, then exploded, and we're seeing this right now. Now, you could argue, and this is what some people do. They're saying, look, Bitcoin loves to do these double tops. Well, you could argue that there's a top and that's a top. You could argue it. I don't think that it is. I think when we zoom out on the other end, this whole thing here will be a top. I think we're going to see one more. I could be wrong. Maybe these are two tops. But I think we'll see one more before we go into crypto winter. And like I said, next time I'm seeing crypto winter, and you know what? Let me put a thing in here. Let me see here. Do I have a, I'll just do a couple lines. Let's just do a trend line here. And if it's going to be winter, you know what, guys? We'll change it to this color here. So yeah, so this is where I see crypto winter. I'm going to put it in, right, let's see, right there. And I'm going to make another one of these. Here we go, Command C, Command V. And there we go. So this is, yeah, so right here, there we go. That's roughly it. But this is where I am seeing Bitcoin going. So if we go into crypto winter, I'm expecting us to be down in this little zone here and here. I'm going to stretch this out a little bit because this way here, I have it here. I don't have to pull it up the next time we want to talk about it. So this is where the zone I think crypto winter is going to be. It's going to be in this zone right here. Now, I could be wrong, but I don't think I am. So, if we break below this, this is our next major line of support. If we break below that, we're probably heading into crypto winter. So right now, this has held, this line of support has held. And like I said, this is where I think. So if we get to a point where Bitcoin is trading anywhere from 50 to 60, I would say that's a really good time to be considering stacking Bitcoin or investing in anything that has some good I don't want to say membership, but exposure, some good exposure to Bitcoin. But that's where I'm seeing Bitcoin winter at. All right. A Valve man says, I'm buying MSTE because the dividend is 35 cents with a yield of 76. I just hope there will not be a reverse split. Okay, fair enough. What are the best ETFs to hold in a taxable account? That's a great question. I actually had somebody request that I make a video of tax efficient. So tax efficient ETFs. Now, let's talk a tiny bit about it though first. I'm just going to go over here to, all right, here we go. And I just want to go to Canva. Let's get out of there. We're going to bring up, we'll bring up the whiteboard. I like the whiteboard. All right. And grab some tools, grab a pen here. There we go. Well, that's not a pen. That's a box. All right, now I got a pen here. A good old tax. Let's just start off with a tax. Bang, boom. There it is. So when you're looking at ETFs, there are things that are considered to be pretty tax efficient. I will tell you a couple of them. Return on capital, ROC, capital gains, eligible dividends. So these are your big ones. So these are definitely big ones. So return of capital. So when a company or when an ETF employs return of capital, it's not exact. a lot of people like to say, oh, they're just giving you back their own money. It's not exactly that. Some companies, return of capital is sometimes a catch-all phrase used in accounting. So it's not necessarily that they're returning your capital, but it does have that effect. So with return of capital, if you have an adjusted cost base, and I'm going to grab a smaller one here. Let's say, for example, your adjusted cost base is 100. Well, return of capital will lower that number. So it might lower it, let's say it lowered it to 99.50. We'll say, let's say in that year, the return of capital you received returned it to 99.50. So at tax time, what are you paying? Well, you're paying nothing. The only way you're going to pay is if you sell those ETFs. If you sell those ETFs, well, instead of using 100 to determine what your capital gains are, you're going to use a 99.50. So, that will become your new adjusted cost base, and that's where you will pay a little more tax. Well, you'll pay 50% of of that extra 50 cents. 50% of that would be considered taxable. So basically, for every share, you'd be looking at a quarter. A quarter would be taxable in this situation. So that's pretty tax efficient. Capital gains. So if, for example, a company employs capital gains in their dividend, let's say we'll say that they're using 10% capital gains. So if in that year you received $1,000 in dividends from them, well, what that would mean is that 10% of that, so $100 would be capital gains. And of course, because the way capital gains work, you pay on 50%, so that would be $50. So you would have $50 that would be tax, that you would be, $50 that would be 100% taxed income, because that's 50% of that. So simple as that. All right, eligible dividends. So those are going to be Canadian companies, and they have reduced rates. So you basically, you're still paying taxes, but you get credits. So you do get reduced rates on the eligible dividends. You're paying a lot less than you would be for ineligible dividends. So those are what we call tax efficient. So I'll put, let's just put an EFF here. So those are your tax efficient. Those are the things that you're looking for in ETFs that you're holding outside of your TFSA or other registered accounts. If you have lots of room in your TFSA, if your TFSA is not maxed, there's no reason to even look at this, to be honest, because just fill up your TFSA. The only exception is if you're playing with something highly speculative that has a good chance of perhaps crashing on you, you may not want to put that into your TFSA and shrink it. So that's kind of that one thing. Like if I have something very speculative, or if you are doing day trading or swing trading, business activity, you don't want that in your TFSA. You want that in your non-registered as well. So things like, if we look at, I'm going to say tax inefficient. So your inefficient stuff would basically be ineligible dividends, so ID, because they're you don't get any credit on those. You are paying 100% on those. Foreign income, so FI. So if you've got foreign income, interest, anything that's considered interest payment. If it's from anything from a REIT, so REITs are 100% taxable. The reason for that, now I want to clarify something though. And here's an interesting thing. So we all know that REITs are 100% taxable because they're passing that tax on to you. But if we look at an ETF like RMAX, yeah, they're holding REITs, but you are also going to get some ROC in there. You are probably going to get some capital gains in there. So you will have, like that dividend from RMAX, it's not going to be 100% taxable. You are going to get some of these other components, but you will get some parts of it that would be 100% taxable. So any of the money in RMAX that comes from the dividends from the REITs, those would be 100% taxable. So just sort of something to keep in mind. All right. Whew. Oh my God, I'm about 20 minutes behind. Guys. Buddha, if anyone is looking for high MSTR dividends, try STRC. It's been surprisingly stable. Interesting. Waiting for airlines to take off. Let's see, anyone holding NDA, so Neptune Digital Assets, Fantastic day on SpaceX IPO news. Nice. All right. Kelly says, had a 1 a.m. phone call, asked for me by name, then said they'd had reports I was trading on an unregulated platform. I did clear the cobwebs from my brain enough to hang up on them. Grr. That's crazy. I will tell you guys right now, if you ever evoke the ire of the CRA or any of the regulatory boards, they're not, I repeat, not going to call you at 1 a.m. So yeah, Kelly did the right thing. Obviously a scammer of some way, shape, or form. Oh my God. Yeah. I honestly, guys, I almost never answer my phone. I pretty much let everything go to voicemail. You know, nobody's going to call me. Occasionally my mom will call me. And if my mom calls me, I usually will answer the phone like, who died? Because that's the only time she calls me. She texts me for everything else. And my mom is like 70, I think she's 76 now. Holy banana bread. Mark, let's see. My 28K of MSTE is down to 9K in my non-registered in January. I think I will move 7K worth over to my TFSA via in-kind transfer. Good plan. Okay. Well, couple of things with that. So an in-kind transfer, you will take, you are getting a loss on that. So that will register as a capital loss, and then you're moving it in. Now, here's the thing. If you want to move it in and you're going to buy it back there anyway, it will, I mean, it's going to recover over time. That's fine. And that loss, well, you're looking at what you're saying right now, it's down to, let's see, 9K. Well, yeah, I mean, you're going to pick up a pretty good capital loss. You can apply that against a capital gain there. So it's not a bad move. It's not a bad move. And now that it's down, I don't think it's going to shrink your TFSA. It might a little bit, but you'll get that back on the other side. So it's not a bad plan. It's not a bad plan. All right. Oh, Nightbot. Nightbot. Let me turn the Nightbot off because we've got a show tomorrow. There we go. All right. Let's see here. Buddha, get out of yield max. I made thousands in dividends on ULTI, but only came out a few hundred in the green. The decay is bad. Exactly. That's kind of what I was thinking. I've never liked yield max. I think I did play. I think I played their NVIDIA one briefly, but yeah, actually, I might have actually played their strategy one as well, but it was a short-term thing. It was a short-term thing when I knew what the market was doing. So yeah, absolutely. Oh boy, actually, I just saw over on the side the ED. It's like I'm just going to get rid of that because somebody might pop in and wonder, oh look, somebody's here to talk about a certain type of dysfunction. Anyway, I'll let you guys figure that out. All right. Congrats, King of Day. Yeah, King of Day won a membership from Relaxing Rains. That was awesome. Mario, I own CLSA for a split core. Absolutely. See, I love CLSA, guys. And actually, you know what? Let's bring up CLSA. So this here, it's a Brompton ETF, and it basically is an ETF of split cores. So if you don't like that one little thing that split cores do. So if the preferred and the Class A shares, if their combined NAV isn't above, if it drops below $15, they'll suspend dividends. That's typically what they do. And it will happen from time to time. If you want to avoid that, going with something like CLSA, and let me just pull it up. This is a new ETF, but look at this. It's just been nothing but up. This is one that if maybe one or two of their holdings, if they were to drop below that NAV threshold, the others are going to sort of balance it out. So it is a good, I like this. I think this is a fantastic ETF if you want some good split core exposure. All right. And Dave says, yeah, I was in ULTY. I'm watching if their new strategy will change anything. I'd still be careful. I'd be careful with them. That's all I'll say about those guys. Michelle says, I'm late. I hate being late. You and me both. You and me both. It's like, if I'm on time, to me that feels like being late. Like I'm that person that, if we set a coffee date. So if you and I had a coffee date for 8 o'clock, I'm gonna be there probably, latest I'll be there is 10 to 8. Latest. Let's see, Mark, you won't believe it. 10 minutes after I joked about investing in a kid shoveling my driveway, 2 kids showed up and they're out there right now shoveling my driveway. I love it. It's a happy ending. It's like a Disney story, Mark. I love it. Dave says, I thought I heard they might try leverage for ULTY. Not sure. Uh-oh. Danny says, that's awesome, Mark. Hello from Saskatoon. And we got Mr. D. Hi. You will not be the only person. We got a few people from Saskatchewan who show up regularly. So yeah, Saskatoon is absolutely, guys. If you're ever looking for a place where, for one, it's a lot cheaper to buy a house, Saskatoon is a city that I think is worth a second look. Definitely. I know even, if I was going to move west again, it would be on my list. It would be on my list as potential places. I mean, it's not a huge city, but it's a nice city. Cowboy says, most of CLSA is quadrivest splits. It is. I prefer to hold splits as singles than CLSA. Okay, fair enough. Some of those different QQQ are hedged and unhedged. Yeah, and that's another thing too, why I would have to look in. So yeah, there's different reasons that you could have different versions. So like, for example, if you look at bank, BANK, well, there's also a BANK.U, and that's bank basically hedged to the US dollar. Brian says, good afternoon, everyone. I had to shovel my plowed in driveway before it all freezes in place. There's nothing worse than shoveling your driveway and then the plow comes by. It's actually funny. I tried this strategy. It didn't work. I thought it might. So I shoveled my driveway back when I was living in Nova Scotia. And then I'm like, I know the plow's coming soon. So I went, just before my driveway, and I dug a big part of that snowbank and I just pushed it all in. I'm thinking, okay, all the snow that they're pulling, it'll all just go into that hole I just made. Yeah, it made absolutely no difference. It was basically a make my muscles sore moment, pretty much. Let's see, windy and snow in Saskatchewan. Okay. Roku is in here. Hello, all. As per ChatGPT, here's the difference between QQC and QQC.F. Here we go. So both ETFs tracking the NASDAQ 100 index. It mostly comes down to how they treat currency risk, currency exposure. Yeah, there we go. So like I said, there's usually some kind of different flavor in the mix, and that's exactly kind of what we're looking at here. Yeah, and ChatGPT, not a bad resource for something like this, but I will warn you, sometimes ChatGPT can be really, really stupid. You might, I always find with ChatGPT, if you want some information on a particular stock, I will give them the name. I'll give them the full name, because sometimes you'll put a ticker in and they'll come up with something completely different. Minus 26 wind chill. Yikes, that's cold. Yeah, we had minus 26 for the last while, but it's warmed up a bit today because, well, snow. Snow tends to do that sometimes. Cowboy says we are forecast minus 40 tomorrow night. Oh boy, that's pretty cold. I remember prairie nights. And guys, if you think about Calgary, because I lived in Calgary, it's prairie. Half of the city is prairie, half the city is mountain. It's kind of an interesting mix because of where Calgary is located. Let's see. Brian says, I won't whine about my Southern Ontario temperatures now. Probably for the best. Yep, gonna be cold on Friday. Jess says one is in Canadian dollars, the other is in American currency hedge. Okay, there we go. Fair enough. All right, this gives me an idea how far behind I am. Crypto is like trading turds. Oh boy. But yeah, it is, that's kind of what Charlie Munger said. So yeah, Charlie Munger, not, but you know what? Sometimes a newer technology, something new like that, the old school may not get it right away. And that's fine. That is fine. Like you can invest perfectly fine without even touching crypto. I make a lot of money doing it too. YieldMax has a MSTE, but also an inverse short MSTR income ETF. They call it WNTR. Yeah, winter. I love it. All right. Let's see. HXS, HXT, HXDM. There's more. Yeah, there's more examples as well. Is SDAY considered foreign income? All right. Yes and no. Yes and no. Some of it will be. So you have to look at something like SDAY, and you have to realize that the part of it that's coming from, for example, a lot of the part that comes from leverage, the part that comes from the covered calls, like all of the premiums on it, that's not considered foreign income. The only part of that would be is when you look at the SDAY holdings. So any stocks that SDAY is holding that pays a dividend from the U.S., that would be foreign income. But that's a small portion of that whole overall thing. So you're not gonna, SDAY is actually pretty tax efficient when you actually look at the numbers. All right, and guys, I'm gonna point out I'm gonna be jumping over people because quite literally I am really far behind. And, that's just the way it's gonna be. Late to the party. Well, hello, welcome to the party. Oh, I'm actually already caught up. I thought I was like 30 minutes behind. I guess I'm not. All right. Let's see. True, thanks for your feedback. Tom says, in your swing trades, do you have a set amount of time in mind? No later than. It's different with each trade. So, right now I've got a couple of trades up that I do have a bit of a time on them. Like, for example, the longer a trade goes, the smaller amount of profit I'm willing to take to get out of it, especially if a lot of times I'll go in. So for example, with Tesla, if I go into a Tesla swing, I know what the volatility is like on Tesla. I like that most times. A lot of times those trades will may only last a day or 2 days at the latest. So I tend to very much cater my time frame on the volatility. And let me show you. Let's go to, we'll go to Tesla. We're going to go to Tesla here. Not this Tesla. I want to go to this Tesla here. All right, now I've got to, oh, we're on the 1 day. That's why I was like, what's going on here? Let's get back to the 1 hour. All right, here we go, 1 hour. All right, this is what I'm looking for right here. All right, and let's come in like this. There we go. So when I'm playing, you take a look here. So for example, let's just look at this bottom here. So this bottom here was on Friday. The top here was Monday. So Tesla tends to move pretty quickly. So for that very reason, I don't want to get stuck in a Tesla trade. So for example, if I got in down here, and we're up here, even though I may want to get up there to sell, but if I only get up there and it's kind of stalling, I might sell, or I'll drop in sometimes I'll drop in that stop loss and it might backtrack on me. And if that happens, sometimes that stop loss, if you're a channel member and you look at the trade stuff I send out, my stop losses get triggered on me all the time. And I'm okay with that. I'm perfectly okay with that. I mean, I'm in the green. I'm happy. Maybe I didn't get what I wanted because I like to make a little bit, but I would rather get out of a trade because my stop loss has triggered than get stuck in a trade for too long. So I have a few, like for example, like Air Canada is one of the ones I don't mind waiting longer. And now keep in mind, my Air Canada trade in my trading account is different than the Canada trade I got going in the 0 to 100K challenge. That one could stay for as long as it wants. I honestly don't care. It's a long-term, it's a very long-term swing. But in my regular trading account, not so much. Like my regular trading account won't be waiting for $21. In fact, we get right now the current one. If we even got close to $20, it's already gone. It's already gone for sure. All right, now I think in the process of jumping over, I did jump over Michael by mistake here. Which is the beat of the? Oh, I'm not sure. Let's see here. Did you drop something a little bit earlier? I'm not sure what. I don't know what you're meaning, Michael. If you want to clarify. All right. Roku says, having an issue with Wealthsimple account reporting right now. They're offering $50 hush money to go away. Not by, really? I've never heard of that. They're basically, wow, that's odd. That's odd. I don't like that. I don't like that. I mean, I like Wealthsimple, but I don't like them doing that. That to me feels a little wrong. It doesn't feel right. Yeah, I would not bite at that either. Whatever the issue is, definitely get it resolved. Don't just take money and disappear, for sure. Isaiah, 10 degrees here and 80 millimeters of rain in Langley. Need flippers. Oh boy. Well, it's the rainy season. It is the rainy season in BC. Well, that part of BC. Have you ever considered Taiwan Semiconductor in your challenges? So yeah, I do like Taiwan Semiconductor. I don't have them in there right now, though. I'm pretty sure some of the tech ETFs I have, I'm pretty sure they have exposure to Taiwan Semiconductor. I would be shocked if they didn't, but yeah, I don't think I'm gonna hold them straight up. It's hard to say. We'll see. We'll see as we move along. Cowboy, thinking NPI may be a good swing. Your opinion? And I know we talk a lot about Northland Power. I do like them. And well, here, let's jump on over there. Let's see here, NPI. And I mean, right now, we're not in a bad position if you were looking to swing them. All right, so let's take a look down here. I want to go to the 1 year. And yeah, you can see they had this big drop. And I think they're worth a lot more than this. And they are in a regulated industry. I think they're going to be fine. And I think they're going to come up. So I would have loved to have done a swing from like the 1623 area. But I think they'll be fine. How quickly they come up, though, that's the only problem I don't know. And that's the thing. When I do my swings, I'm looking for some clear volatility so I can get a general idea of what the movement's going to be. With this one, I don't have that yet. Now, we might. If we could get some ups and downs here so I can sort of get a bit of a channel going, yeah, they would be good. But I think if you're looking for a nice long-term investment, this is a beautiful place to get into NPI for sure. HND, HOD, oh yes. Let's see, if you want an idea of the breakdown of ROCFIED, not that one, you can go to the stock site like eBank and see what it was for 2024 in the document section. You absolutely can. And that's the thing. So, and let me, we've been there before, but let's do it again. Oh, we'll go, all right, well, goodbye, Fancy Magazine. If we go to Hamilton, I'll use Hamilton just because it's really easy to get there. Under our ETFs on Hamilton, just come down here to tax information. And then here we go. Here's their 2024. It's up here for all of their funds. So with HDIV, we like HDIV. Let's do HDIV this time. It will show you there's the amount of eligible dividends. And you might look at it and you'd be like, what is that? That's, where's HDIV again? 0.30577. Is that 30%? Well, no, it's not 30%. You have to do the math. So right now that total distribution is basically $1.97. Go away. I've already subscribed. $1.97 600. So, that's the number. So basically whatever percentage whatever percentage that is of that number there. So it's probably ballpark around 15% of eligible, 15% roughly eligible dividends. And then, yeah, and then you can see capital gains a lot bigger, a lot bigger. So, that's what, maybe 40% roughly of capital gains. A little bit of other income that could be interest. It could be, there's a lot of different things that could be, but that's usually 100% taxable, that part there. And the rest here is return of capital. So when you look at this, when it comes to tax efficiency, well, this is very tax efficient. Basically, you've got the capital gains. So, 40%, which means about 20% of that dividend would be taxable based on the 50% of that. This here would be taxable, the 15%, but you're going to get tax credits for that because they're eligible dividends. So they'll get taxed at a much lower rate. The return of capital, no tax on that unless you actually sell. That just lowers your adjusted cost base. So yeah, it's all there. It's all there. What I would do is if you were doing this for a whole bunch of them, is just make a spreadsheet to make the spreadsheet do all the work for you. So you can just pop in the numbers and bang, it'll pop out the percentages for you. All right. Do you have a track ACB for your taxable account? I'm not a big fan of math. Maybe 60 and Canny are good candidates for taxable account if they are good over long term. I just honestly, when I do it, I just basically throw it together really quickly in Excel. But yeah, the next time I do it for a video, I'll see if I can make one that you guys can use. Maybe we'll throw it over on the Discord. It's not hard. It's really not that hard. Tom Smith says, I had the same problem with Wealthsimple. Accounting issue, ended up getting a 5K settlement. Ooh, well, you see there, 5K is a bit more tempting. Roku, maybe you can get yourself 5K. Counter with the 5K. See if they go for it. Let's see, HDIV might be good for a taxable account, but maybe not so much HYLD. Well, yeah, when you look at HYLD, let's come down here. In this case here, you've got very little eligible dividends. You might as well not even count that. But here, capital gains. Now this one here is 1.66, so I can't really ballpark right away what that's going to be. That's probably going to be, I don't know, maybe 20% capital gains. This other income, a little bit higher. That's going to be taxable, so that's probably not roughly 9%, I think. The foreign income, it's actually, and you'll notice it's not that high. The foreign income's not that high. So, but that would be the dividends coming in. So that there would be, of course, that would be foreign income. So that would be 100% taxable. So that would be about 5% or so. And then a lot of return of capital on this one. So 1.16. So that's a huge amount. So yeah, guess what? HYLD is actually pretty tax efficient. It actually is. Because you think of it and you're thinking the US and you're expecting it. But you got to look at a lot of, there's a lot of tech exposure in there. Tech companies don't have a lot of dividends. And that's the only place you're really going to see some of that foreign income in. And it's not a lot. It's not a lot there. Let's see here. SDAY holds 2 ETFs, so SMVP and VOO. Yeah, there we go. So yeah, your VOO, that's going to give you exposure to a lot of the S&P 500. That's basically VFV, but the American version. And SMVP, that of course is another Hamilton one. That's one of their, what did they call them? The VP line. So you got SMVP, and I think there's also a CMVP. Dave Perez, does Questrade show post reverse splits for yield max? I don't know. I don't have Questrade, so I can't tell you what they show. But if anybody knows, feel free to throw it in. Candace, can you show us your screener again for trades, market cap, etc.? Yeah, I can do that. All right. let's just see here. All right, actually, I'm going to go to a fresh page on this. So there's a few different ones, but TradingView, I think, is the one that you might be thinking about. So this is they have an ETF screener. You just go to products, screeners. So if you're looking for ETFs or if you're looking for stocks, if you're going stocks, we'll go stocks first. It will pull everything up. Now, it will automatically default to US. If you're looking for Canadian stocks, you just come down here and you choose Canada. And you have all of these different categories. And so here's the thing. You've got all of these categories, but you can add custom categories. So even though, for example, like here's the market cap, you can choose, like if you're looking for a mega cap, well, not in Canada, you're not. If you're looking for this here is your 10 billion to 200 billion. I was going to go gigs. I'm like, whoa, this isn't tech. But there's one of the categories, and each time you put a category in, it reduces things. It reduces things. So let's say, for example, you want something that's volatile. So let's go with, do we have anything that has, all right, here we go. Here's two that are very volatile. Interesting, IVN and FM, First Quantum Minerals. So these have betas above 2. So we're just looking at that as something that if you're trying to do a swing trade, volatility is sometimes good. So those are just different categories you can choose. You can also click on that plus and you can choose anything. Like here's all kinds of different market data things. So if you want the volume change, the volatility, relative volume, price change, it's all in there. And that's just market data, technical analysis. There's different things that you can choose, Bollinger Bands, candlestick. I mean, you can choose pretty much anything. There's more things in here than you'll ever have to use for sure. But yeah, this is definitely, I like it. I like it quite a bit. And as I said as well, you can also, and we'll go backwards here. Yeah, leave the page. You can also do it. You can also do it over here for ETFs as well. And once again, it's showing you all of the US ones. So you got to turn it back to Canada. Bang, and these here. Now you'll notice a lot of these ones up here. Well, actually, in this case here, we're just seeing some of the big ones. So Vanguard, all of that. So depending on what you're looking for, right, you might be saying, okay, well, I'm looking for an income ETF. Okay, fair enough. Let's go to dividend yield. So you're looking for, now you might be looking for above 15, but let's say you're saying, okay, well, I don't want a dividend that's a yield too high. I'm looking for something between 10 and 15, a sweet spot. There you go. And this will pull them up. You'll see, look at this. You got HMAX, HDIV, UMAX, HYLD, SMAX. And you can also come into here and say, okay, I want there to be some leverage. So there we go. You put leverage in it. Only the ones that have leverage are here now. And you'll see we still have HDIV because HDIV uses leverage. So here's bank, QQCL, BKCL, right in here, HHIC. So, it's pretty good. It's pretty good. And you can play with all of these. And once again, you can also add things. You can add the same whole thing. Like you could, for example, let's see, asset class. I'm just seeing here. I think do they already have it here? No, I was going to say, I think there's a place in here you can actually do company. Like if you wanted to only look at Hamilton, I'm pretty sure you can do that. Where would that be? Where would that be? Security info. Let's see. Asset class brand. Maybe brand. Yeah, here it is. 3IQ. Let's go. Hamilton. There's Harvest. Oh, there it is. Hamilton. Duh. There we go. So you've got two options here, which is really interesting. Now, one of the things, I'm just wondering, I think, yeah, 10 to 15%. I'm wondering why HYLD is not showing up. But unless they happen to have fallen just below 10%, I don't think they have. Okay. Anyway, you can play with it. It is kind of a cool thing. Definitely. All right. Let's see. Wealthsimple issue. How do I check in my account if I have the same mistake or not? Would it be possible to give more details? Absolutely. Tom, yeah, definitely drop any details in about that, so Billy can take a look to see if there. I have a feeling though a lot of issues are pretty obvious sometimes, but like I said, I've never had any issues at all, but I think a few of you guys have. All right, guys. We have gone way into overtime. We're at the 1 hour, 40-minute mark. This has been, once again, you guys have been you guys are a fantastic group. We will be back tomorrow. We have another show tomorrow. It's gonna be good. It's gonna be good. I can't wait. And then tomorrow we'll have the opportunity to add a Friday show. So let's keep me working. Let's keep me working for sure. All right, guys, until tomorrow, enjoy the rest of your day. Don't shovel too much or wait for the kids to come to your door so that they can shovel for you. Until next time, guys, enjoy the rest of your evening, and I'll see you all tomorrow. Bye.